Futures are modestly rising this morning despite uneasiness over Spain's financial crisis and poor China trade numbers. European stocks climb for the first time in a week as British manufacturing gains and Spain is set to receive accelerated bank aid. Asian stock markets declined after the growth in Chinese imports halved from May to June, while their output increased just over 11%. I'm Brittany and the morning call starts right now.
Good morning, I'm Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Brittany with The Street, and together we bring you the morning call. Headlines this morning include Spain getting accelerated bank aid, and we're seeing the first European indices rally in a week. Scott, what are you making of how the market is shaping up today?
Well, today we're starting on a positive note, but I think because that we've digested the past few down days pretty well. Yesterday, Spanish yields were above 7%. A lot of people were worried that they would be priced out of the public market, and not the public, I'm sorry, the private market. So with this accelerated payout, it definitely lifts some spirits, so to speak. But overall, I would say with all the bad news that we've been seeing, the market's taken in stride, considering that we've held higher and we've been building this upper floor, above the gap from the past EU summit a week or so back.
Yeah, and speaking of taking it in stride, disappointing data did weigh on the markets yesterday. Today we are having bad trade numbers out of China. Of course, there is the concern still about Spain. So do you think the market has bad news priced in already?
It's doing a hell of a job trying to, because every day we come in, there's some type of bad news, there's some type of news showing that growth around the world is slowing. So the question is, can stimulus and rate cuts counteract that fast enough, or do we fall into a double-dip recession or in a deeper recession, depending on what region we're talking about? But overall, if you look at the chart pattern of the SPX or the spiders, this is what I'm more concerned about, is that, if you look here at the pattern, we've talked about major support. We came into it 130.80 about a week or so ago. We gapped above it when finally there was a stronger framework set by the EU TARP, so to speak. You gapped up, had a little bit of follow through. Here we were overbought. We were like plus 75 on the McClellan oscillator. So right there I said, let's sell some stock, reduce longs considering the size of the move. And recently, we've been holding this floor here. If you look at the price, 134.70, this gap has been held. So the bulls kept a lot of this bullish momentum pent up here. So they did a decent job. So the question is today for a trade, can we get into the gap from the jobs report? If you recall, we gapped down Friday and we came off the lows. So now the 135.77, we're opening above it right now at the futures. I think you have a clear path to 136.29. Then once that gap is filled, you have 137.51. So overall, I think the market is acting very constructive, especially from a bullish stance. If you're short, you're probably a little bit stressed out right now.
Right. And we have to mention Alcoa coming through beating estimates. How important is that for the market?
I think a lot of people like to talk about it and everyone puts the importance on it, but it's really a non-event. I guess it's good to see that the lowered expectations were met and it's up a little bit. My traders will not be buying hundreds of thousands of shares of Alcoa today, trading it back and forth, but they're probably in other positions that could respond well if the market stays firm. If you look at the chart pattern of Alcoa, you will see that it's been so battered and bruised and so beaten up, like it's just a gross chart. Trending and trending and trending down. You do have resistance around 9. I think it's near there, with this type of earnings report. I think above 9, and it can hold above it. I think that the path of least resistance is back to closer to 10. But I think the important thing to take out of Alcoa is that a lot of analysts have been taking down expectations for Q2 across the board. So, you've had pre-announcements like in the software sector. We saw INFA, a lot of the cloud names get crushed. You've seen stocks get, beaten up if they do pre-announce a disaster quarter. So since that all happened, estimates have been down. So if we could beat the lowered estimates, I think it'll support the rally. But if they start pre-warning the next quarter, saying how bad Europe really is, how bad here could be with the public, sector constricting somewhat, I think it's going to be very, very spotty. But there is a chance that earnings could actually support the level or this upper floor that we've been trading against.
There are sectors out there that are near highs that are not punishing investors. Let's start with consumer staples. It has had a good run, but it did pull back in the last 3 trading sessions. So it is above all key moving averages. Where's the level of support?
It just had a big move. It was probably the best acting group as we bounced, through that whole big rally with the EU summit. So if you look here real quickly at the chart, you will see that you had a big move through prior resistance. A few days higher. It's above the 8-day moving average. Still looks good. I think if you're an investor in consumer staples, I would stay there. You've had a really, really nice run. We're above all the moving averages. I don't see any faulty signs yet.
And home builders also really holding up well. What are the key levels to watch with the home builders?
This isn't at new highs, somewhat like the consumer staples, but it's acting very well. If you look here, all year long, this has been a leading group. Everyone's been trying to say it's going to come in. We've seen some good data in the housing group. So here it also cleared what I call a descending type channel, a series of lower highs. You have a high, 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 all in a lower fashion, and then you gapped above it. We're holding sideways. This still looks good. You look at some individual names within this group. Look at Lennar. Lennar has been paying investors who've been staying the course. This stock is showing leadership. I think you could stay with it. You look at KBH. This stock, not quite at the highs, but making its way back. I do think that this one, you could stay with this. It's above all the moving averages. So there are some names out there if you're a stock picker, and the home building group has been a strong one with the data supporting it recently.
And even retail also showing leadership. Taking a look at the RTH, would you suggest buying on any weakness here?
This has been a very spotty group where you have your haves and have-nots. You had some stocks fall apart, whether it was Tiffany's, some of the high end, but then you have stocks like Walmart. I hate to plug my retail stock of the year, at highs, and it's been acting very well. If you look at RTH's first, you will see that you had a nice sideways channel digesting a big move that we saw in the first quarter of this year. Right now, it's near the highs once again. You saw a lot of people bringing down their retail numbers, but overall above the 8-day, holding higher. I think if you want a high-level stop, put 42 as your high-level stop. The longer it goes sideways, the higher the probability that this group could lead us to highs. So investors here are getting paid. You look at a stock like Walmart, unbelievable move. I talked a little bit about Target. I think there's some type of opportunity here. I know it's slower and it's a little bit more sluggish, but if Target could finally get above this little descending channel, I do think there's a trade here. So watch that 58 level for Target. And then you have the haves and have-nots. Lulu's been pressured, Nike's been pressured, Under Armour's been pressured. So you definitely have to be a little bit more selective, as this tape isn't just a blanket statement.
Right. Not everybody can be a leader. And coming up, we're going to go in the trenches with weaker stocks bouncing off the lows. But first, a quick commercial break. Stay with us.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com and one of the traders in the active mentor room for T3 Trading Group. What I'd like to do today is I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit in New York City, which is on Saturday, July 14th. We're going to have quite a few speakers today. There's going to be myself, Mike Lee, Evan Lazarus, Mark Sperling, Rob Smith, Rick Meadows. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people like myself. I'm going to pump you up. I'm going to guarantee you that. Other people like yourself who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. I can't stress that. I know it's a Saturday, but you know what? I want you to be there, to get excited, and to be here. Prove to yourself how bad you want it. Show up and come down and get excited with us. Saturday, July 14th. Now, very quickly for the registration. All you have to do is register at T3Live.com or be an existing member of T3Live.com, and you get 2 complimentary admission tickets for free. So all you have to do is go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time. Saturday, July 14th here in New York City.
Well, we talked about leading sectors that are near highs. Now we're going to talk about weaker sectors bouncing off the lows. Let's start with Market Vector's agribusiness. MOO failed to hold the gap on Friday, June 29th. 200-day did not act as good support. So where does next support come in?
Well, the ags have been one of the weakest groups leading into the last month. And Jill from Option Profits has been here. She's been telling us third quarter is going to be the quarter, third quarter is going to be the charm. And meanwhile, about a week or two before the third quarter started, they started acting very well. It was a very spirited move off the lows. So tactically, there were ways to enter it. If you avoided it the first quarter or so, or you were in small, you could have added. And if you look at the chart here of MOO, you will see that it's acting much better. You know, you had this reversal here, and then you had a nice move off the lows, and you had a big gap up, and it's trying to hold the gap up. The 200-day was couldn't hold it right here, but it came a long way, so I wouldn't expect it to. So right now, on a short-term basis, trade this verse, this 49.19. I think that this sector is still in the game. I know the crop report came out, so maybe, you know, a little bit of a profit taking in the fact that it's already out. I like, you know, we talked about Monsanto being one of the strongest stocks to go to in this group, looking still good, holding higher. You know, CF has not been too shabby either. You know, big move off the lows, holding above the 8-day moving average, looks good. And then Mosaic also from a bottom level stance. We've talked about this one, you know, after its little red dog reversal that you saw down here. I talked about it with Jill. Here was your entry, and since then you had a few more entries right here as it cleared this W pattern. And then you also had another move as it just continued, and now it's above the 8-day. Yesterday you did have a bit of a down day. But at this point, just, you know, if you're not committed to it, have high level stops. I think, you know, if we break below this 54.50 area, you could see a retest of 52.53. Big move here. Just, you know, stay with some, but make sure you just take some profits along the way, because, you know, these things move around.
And then there's oil. When it comes to the OIH, the descending channel has been staying in control. So are lower prices in store in the short term for oil?
Oil didn't rally. Like it rallied after the agricultural group, and it's showing some signs of life that it can actually continue. For the first quarter, we had a nice rally in the OIHs, and then second quarter it was definitely a lackluster quarter for it. It was a weaker sector. Oil itself went from like 105 down to below 80, so why not? But now if you look at this descending channel, which you just mentioned, we actually just broke above it. So this lower level descending channel, we broke through it, and now we're trying to hold above it. So if you take a closer look here, you will see that I would say short term, if we could stay above this 35 area, if this group itself could hold above the descending channel, and go sideways here, you will have another type of flag pattern here. And then if it wanted to get above this 37.10, it too could try and get to its 200-day moving average, which the ag group did. And take a quick look. Let's see stocks like Schlumberger acting a bit better. I know some people do like this stock. It's been a horrendous stock this year, but at this point, it's trying to change a little character. I think if it holds above 64, it stays in the game. The next real resistance would be here above 68 to get to the 200 days. So there are some trades here, but if you were an investor in this group and you just held your nose, went underwater, you don't really care, because you still probably have a long way to go to get even.
And semiconductors as a sector has also been weak. The SMH below all key moving averages just had 3 consecutive down days. So is more pain in store in the short term?
Well, people usually say that semiconductors are the nuts and bolts of tech, which they are. And having them as a weaker group is never really great for the composure of the overall market. But right now, the market still has a lot to prove. If you look at this sector, you'll see that ever since this little head and shoulders top formation, it hasn't acted very well at all. Here's your left shoulder, the head, the right shoulder. Well, a lot of the indices had the same thing. You came down, you retested it, it held a little bit higher, but look how quickly this came in to recent support, where a lot of the other indices are holding higher. As you can see, if you look at the difference between the retailers and consumer staples and the home builders, this is below all the moving averages, still pressured. Maybe that's showing you some signs that overseas and in China, I know they use a lot of semiconductors and everywhere. So this is one of those sectors that has a lot of exposure to the world, so to speak, and it's been pressured. If you look real quickly at Intel, which was stronger in the beginning of the year, it's really, we talk about breakout failures. Ever since Intel had this breakout failure right here, it's been under pressure. This is when it broke this support. It tried to rally back up, potent down day, led to a move back to the 200-day. I think if you're still in Intel, it's okay. But if it starts to break below, you saw AMD actually pre-announced today, this small uptrend, you could see a move back down to this 25 level. So right now, the semiconductors aren't the place where the action is.
All right, well, let's do some quick hits here. Apple, of course, just can't keep this guy down. Still performing well. Where's the next resistance?
Apple, it's been unbelievable the last 4 days. It had 1 day of a pause, and then yesterday it was down and then just started to go again. I was hoping it would pause a little bit more, but my hopes and what Apple does is two different things. I am long the stock. If you look here, you will see that you had a nice move above this 590 area. That was a buy price. 584 was a buy price from the price point sheet. Now it's trying to get above this recent pivot. If it could stay above 614 today, and they don't just sell the gap up after a big move, the next level here on Apple is about 620.25, and then the highs here are 644. I think you stay long this as a macro investor, and as an active trader, it must be on your game plan.
And we're seeing momentum out of Facebook. So where's the next target to watch here?
Facebook just had a big move, and yesterday on Twitter, I'm selling some, reducing some longs. If you look, it had a nice move. So go back to this chart. Small little take profit signal by closing near the lows. But I think overall you have somewhat of a cup handle pattern where at some point I think this thing gets above this 33.45. So at that particular point, it could put it back in motion to the upside. So I think let it stay in this channel for a little while, and then your next real big buy price is above that zone.
And JP Morgan snapping back yesterday after 3 consecutive down days. Of course, we have earnings on Friday. Will we see a lower price before the next bounce?
I think it's a very, very important earnings report for JP Morgan. You had to bounce off the lows when they came out to a $4.2 billion loss. Some people are saying $9 billion, some people are saying $6 billion. So if they finally disclose what it really was, and if it's anything less than $5 billion or so, I think the stock rallies. You look at the chart, not compelling at all. If you're in like tier 1 and you entered on this reversal day, or you entered when it broke this small little lower pivot, stay with it. I wouldn't be in tier 2. If you have to be in the banks, which you don't really have to be, the latest pattern here is when it broke this little uptrend to the downside. So it's trying to hold support. I think it tries to bounce probably to 35-ish before the numbers, and then we'll talk about it on Thursday just to see where it is. But as of right now, let's hope yesterday's low is the low, because that'll help the overall market.
All right, so where is your focus heading into trading today?
I'm coming in net long. I was short and with some positions, or I had some positions and I was short the spiders, and the way we acted near that gap, I covered my short, so I went a little long. I'll probably take some off into this gap open. I'll see, can we fill that gap from Friday? Can the spiders get to 136.25? How does it act? Will it push through and then fail, or will it push through and close strong? So at this point, I'm being a lot more tactical. I'm trying to stick with trades that have nice patterns, that have continuation. Yesterday, Apple was the place to be. Today, after such a big 3-4 day move, it might not be as big. So, move around and just don't have an opinion. A lot of guys who think the market has to go lower. Last year at this time, we had the summer top. You know what? If we keep going and we do get some decent earnings, you're going to have to make some choices on whether or not your thesis could hold out as long as your pain tolerance.
All right. Happy trading, everyone. Have a great Tuesday.